This channel is for educational purposes only. Make sure you do your own due diligence before making any investments. And there is inherent risk in trading, so it's speculative. Just make sure you keep that in mind. Hi, this is Joe. We're going to talk about the S&P and the QQQ today. I'm also going to look at the heavyweights, and what that is basically the stocks that have the biggest weighting in both of those indexes and see how those trends look. I think it's a good way to kind of look under the hood and see what's really going on. Sometimes just looking at the indices, even if we go through all four timeframes, I don't think is enough. And so I want to show you one of the other things that I look at that I think is fairly important. Let's go ahead. I want to also mention to you guys that I'm offering something to the Invest Like a Pro viewers, and that is my Rabil stock. If you go to Rabil Stock Research /services, this is the reports that I send out to institutions, and I've started to sending it out to individual investors as well. A lot of information. There are two really pretty powerful reports that are sent out once each week. One is the overall review over the weekend that I do, and it does provide, it's a pretty extensive report. And then also I go through all the sectors and provide some of the better looking stock ideas there as well. And that comes out either Wednesday or Thursday. So anyway, for the viewers of Invest Like a Pro, if you go in and sign up and use the coupon code Invest Like a Pro, if you type that into the coupon area, you can try out the service for $50 for the first 2 months. So I encourage you to take a look at it, at least go to the website and take a peek. I think, the way I look at it is if you can find a good idea or two a month using the service, it's going to pay for itself. So that's kind of the goal. It's really more of a bottom-up type of a thing. It does provide a lot of insight into the market, but I'm really trying to generate ideas for people. So anyway, let's go ahead and get into the charts now, and I want to go into start with the S&P. And one of the things, just to give you an update, there really wasn't much of a change in the sentiment. It dropped from like 38 to 36. We got a few more, a little bit more bearish people, a few less bulls, but not a significant change there. And the volatility from the ATR did drop off and now is below a declining moving average. And I would view that as a positive for that component of the market conditions. So let's go ahead and look at this S&P chart with all four charts up. And I wanted to just show how, you want to look at each trend, each time frame, and look at the trend, look at the momentum, look at how long the trend has been in place, look at whether it's overbought or oversold in each time frame and kind of get a feel for that. But if you go through and look at the trends, it's pretty obvious right here that we're in an uptrend on the monthly, weekly, daily, and hourly right now. All four time frames are showing positive trends where price is above a rising 18, which is above a rising 40. And that's how I would define a trend in any time frame. If the price is holding above the 18 and that is rising, it's a very, very good sign. If the 18 and the 40 are rising at about the same rate, then you have a pretty strong trend in place. Now, one of the things that I wanted to bring up is that if you look at this, the MACD lines are probably in better shape than the ADXs are. And what I would tell you is that you want to look at both of those, and they sort of neutralize each other in each time frame. So on the monthly chart, we got a really strong confirming evidence on the MACD, but the ADX has not kicked in yet. And a lot of that has to do with this big drop that took place in 2020. And there is a lag to ADX, and it's the reason why we haven't seen that kick in yet. So it can't be a reason for what our position is on the market right now in terms of this ADX, but it does sort of neutralize it for me. It makes it look a little bit more on the neutral end for the monthly. If we go to the weekly chart, the MACD is actually the one that's not confirming here. And the last peak to the upside, the ADX did confirm. And now we're looking for green DI to get going again. It's still above the red. Green's above red, but green has come down below 25. And the fact that that is the strength of the buyers is below 25, we do want to see this start to get back up and confirm a new high in price, which isn't taking place right now. So again, it sort of neutralizes what's taking place here. While the ADX is not bad, the DI line's not so great, and MACD not confirming. And then if we go look at the daily chart, we don't really have much confirmation. With price hitting a new high, MACD is still not at a new high, and the ADX continues to lag. And then go to the hourly chart, and we can see pretty decent confirmation on a MACD basis, but ADX again is lagging. So what does all this mean? And if we look at all of our market conditions and go through and look at this, I think number one, the responsibility that you really have to give the most respect for is the trend. Trend is always the most important thing to me. And then I always look at the indicators to help me define how strong the trend is or the quality of the trend. And so when we look at the market this way and just look at an index, I don't think it gives you enough insight as to what is really going on. I think what's happening right now is we've got a mix. We've got some stocks with really strong characteristics and others not so strong. Before I get into the individual stocks, let me go ahead and look at the QQQ real quick. This is in the same boat, essentially. When you look at this, the different markets or the different trends, depending on the time frame, we've got a bullish trend on the monthly chart. We've got a bullish trend on the weekly where the 18 is still above the 40 and now price is back above. The daily chart had been kind of going through a corrective process and now is starting to emerge out of here. We don't have an 18 above the 40. I would definitely classify this as neutral right now, but the hourly chart has turned back to the plus side with the 18 above the 40 and both lines rising. So I would say that the monthly momentum is actually pretty decent on the QQQ. And ADX is still holding right around 25 on the weekly. Once again, the MACD on the weekly is not so hot, and I think it's putting a little damper on this overall trend. I think this is going to have some problems as it tries to rally back up towards these highs on the weekly. As we get up to 325, 330 to 340, I think you're going to start to see a little bit more resistance coming in. And it might be a little bit more of a struggle for this index overall. On the daily chart, we're actually getting back above the 40 after going through what I would consider to be somewhat of an opposing trend pattern because the 18 was below the 40 and price was below both. So we had kind of the opposing trend developing to the weekly chart. And now we're starting to turn this back up in line with the weekly again. So, I think the way I would look at this is not to be, don't necessarily use the indexes to make all of your decisions. We want to get a bias, right? And the weekly had been, I think, is still somewhat neutral, maybe slightly positive now based on the way this is closing the week. I'd be a little bit more comfortable calling this positive on the weekly chart for the QQQ. And then on the S&P, it's been positive. And if you notice, we're holding the key level for the S&P was 3,700, and we held that. And that's the line in the sand for me. I thought if we broke that, it would be a lot more serious. And then if we go and look at the QQQ, 300 was the key level for that one. And so, if I look at that, I would say we're basically holding the 300 level here. And, the trend is essentially still a bias to the upside. Even though we've lost some momentum characteristics, I would argue that we're showing still positive overall signs. So how do we use this information? I think as you go and you look at the a stock like Apple and you see how it's had a much deeper correction. It's broken the 18-week. That line has kind of rolled over a little bit. I'm going to zoom in on this and now. You can see where this line is sort of flattened out. Maybe it ends up forming a little bit of a range. I mean, maybe this breaks the 40 and ends up weakening somewhat. But then let's look at something like Google and look at how strong this pullback was. It couldn't break the 2000 level. It's been really mild. ADX has remained very bullish. And then we have the pattern that I really like on the daily chart where you hold this 2000 on a sideways consolidation. The 18 comes below the 40. So we get this sort of opposing trend pattern. And yet MACD comes down to the zero line and turns around with low ADX. Really quality setup. I think to be on the lookout for. And then look at something like PayPal, sort of the opposite. You had a really violent decline to the downside on the weekly, putting a lot of pressure on that 18-week. MACD has sort of rolled over. ADX is below 25, a lot weaker pattern. It's probably going to form some kind of a trading range. I mean, I don't think this is one I would try and capitalize on right now. Whereas if we look at something like Facebook, I think you're in a much stronger position. Consolidation has been really healthy, and now we're starting to emerge after correcting down towards the zero line with very strong ADX. And also notice the ADX on the daily chart looks pretty strong as well. I want to end this by taking a quick minute and showing you something that I do. So this is one of the reports I send out each month on my on the research, Rabil stock research, and along with this page, I send out the charts of every one of the top 30 heavyweights. And I call it a heavyweights review because these are the stocks that are having the greatest impact on both the S&P 500 as well as the NASDAQ 100. And so these are the most, the biggest cap weightings. And what I've done is on the right, I've got the positive and negative trends under the monthly chart. And then in the middle here, I've got the weekly positive and negative trends for the intermediate term trend. And then on the left, I've got the short-term trend using the daily positive and negative. And each one of these categories. So the only stock that's currently in a short-term negative trend is PayPal. Based on the way I have categorized these, we do have some neutral ones. So if there's not a green or red check mark, then I would consider it neutral. And so one of the things I just wanted to point out, and I know I've brought this up a few months ago, but I did want to show this again. Notice how many of the largest caps, so these are the big ones, the ones at the top of this list, are it's sorted by market cap. So we're talking about the top 15 or 20. Pretty much every single one of these have a bullish long-term trend, and most have a bullish intermediate term trend. So it's hard to get overly negative until we start to see a little bit more damage taking place to some of these bigger stocks. Now, obviously, not every one of these are buys right now, and I'm not trying to insinuate that, but I do think this is a really good way to look under the hood of the market and see what's really going on. I think the more you look at individual stocks and components of indices and determine what's going on in each one of the trends in the different time frames, I think the better off you're going to be in terms of your analysis. So I want you to start incorporating this into what you're doing. Even if you just look at the top 30 stocks based on market cap and go through and look at the monthly, weekly, daily, and get a feel for whether those trends look good or not. This is basically what I've done by all the check marks. So hope this is helpful. Please hit that like button, and we'll see you next time.